Now, China and Brazil should start conducting trade between them using their own currencies, of course, bypassing the dollar that has been in use across the world. Now, the two nations will change yuan for reals and vice versa. And that deal follows a preliminary agreement in January. The Industrial and Commercial Bank of China and the Bank of Communications BBM are now expected to execute those transactions. Well, let's now take a look. Let's now delve further into that conversation. We had a chat with some analysts about it. Take a look.
Obviously, one of the most cited benefits is the lowering of costs of trade. I think obviously one understands that if you are trading in the dollar, you need to convert from your currency then to the dollar and et cetera, et cetera. There's a process involved that accrues costs and has a cost implication in terms of where you come out in terms of the trade process. And I think that is one of the most obvious ones. And then the second aspect is then, obviously, if you're trading your own local currency, ease and availability of access to the currency is one of the benefits. But I think from a disadvantage perspective, I think we've all become accustomed to a lot of items being benchmarked against the dollar. And we now start to have questions around how will we go in terms of the aspect of price discovery if we're not necessarily pegging the price of certain commodities and resources to the US dollar. What will be the benchmark for ascertaining the pricing from a world trade perspective? And that's one of the questions that we are left with in terms of where we are going forward. One of the things that has been unfortunate is that many of the political outcomes of many of the points of contention in the international community have led us to this point. They've led us to a point where the world, in particular, many of the political powers that sit to the east, as it were, are asking the question to say, why are we pegged to the dollar if we're living in an environment where there isn't parity in terms of the execution of international treaties? And I think, unfortunately, over time, that has played itself out. And it has not necessarily been, for lack of a better term, aided by the fact that we've seen the growing economic input that China gives to the world, as well as new territories also starting to assert themselves in terms of the economic landscape, such as India, as well as Russia and their significance in the whole macro story as it plays out on the global stage. We've experienced some tumultuous events around the dollar. I think the Fed governor has come out with some quite outlandish statements of late, where he's made pronouncements on where unemployment and inflation needs to be, that have literally signaled to the rest of the world that there will continue to be an upward trend in interest rates. And that has had a rippling effect across the global economy. And I think we find ourselves at a point where the global world is looking at America and saying, we definitely have to be at an inflection point where we're possibly moving away from the dollar, because we're in times where we've seen in the last regime, we've seen in this regime, lots of factors contributing to uncertainty about the policies that will come out of America and the impact that they'll have on the global stage. So I think we have a future where we will see a greater role for cryptocurrency, for example. I think in these times when we've experienced this inflationary increase, we've experienced these high inflationary rates. If you look at the trading prices for cryptocurrencies, they've strengthened quite significantly. And that is a signal that some feel it's an alternative to the currencies that we're currently trading with. I think there's been also murmurings for some quarters that the fiat currencies are currently not necessarily pegged towards anything. Do we see a reversion to where the value of currency is closer linked to gold reserves? And is that what the future needs to look like? And I think also then there's also conversations amongst other quarters that say, do we eventually find ourselves in a situation where certain blocks, like you have the euro in Europe, start to form single currencies that allow for a more seamless trading? Do we get a single currency in Africa? And that probably is an outcome that helps to give a greater level of certainty in terms of trading parity on as the currencies will be linked. And I think there are many, many factors that still need to play out, but ultimately, I think we find ourselves in a world where if we're ideally moving in the right direction, there will be a greater level of certainty around how currencies are applied in different countries, and it won't necessarily be the dominance of a single currency as we have seen in